Fed advisor Danielle DiMartino Booth, Bulltid Capital Markets, their chief strategist there, Kathryn Rooney Vera, and FreedomWorks economist Stephen Moore. Danielle, I got to go to you. Your initial impressions on this decision, what it means for the economy, and perhaps the Fed's next move.
Well, the Fed has not alluded to making any move at all. In fact, Charles, if you look at what the Fed has done since March the 23rd, I could sum it up in one word. Really, it's been a nothing burger. And I'm not so sure that investors are going to be impressed with this. There was a lot of pressure on policymakers, given the relatively small size of the relief package that's being bandied about inside the Beltway. I think investors wanted a little bit more from the Fed. They wanted maybe an unemployment benchmark that they would hit before they took their foot off the pedal of quantitative easing. They wanted longer maturity purchases. They even wanted, a hint that will increase the size of QE. So the pressure builds for in the next half hour on Jay Powell to deliver more in his press conference, in my view.
I am shocked that the market is holding up as well as it is right now. I agree with everything you just said. It's not maybe that the Fed promised it, but Wall Street certainly worked itself into a frenzy. Steve, I know, of course, you're no fan of money printing, but what happens if the Fed starts to print money for other things? Because what we're learning is that there could be a goal for them to focus more on things like social justice, even climate change. So this looks like it would just be the very beginning of massive printing.
Well, a couple of things here. When you have the Fed, Charles, purchasing, I think the number was $80 billion a month of Treasury bills, that's just a form of monetizing the debt. Right, Charles? It means that the government is spending the money, and then the Fed is buying up the debt and printing money to buy the debt. That's maybe appropriate in the short term, but people should realize, the investors, that story historically doesn't have a happy ending. And so it makes me nervous when you have the Fed buying up all of these assets. Number two, what's so interesting is that report is that they're not going to be raising rates. But, a lot of my friends on Wall Street were suspecting that they might even go negative on rates. And I'm actually pleased that Powell does not want to have negative interest rates. That's not a successful policy. But it is interesting, because I think a lot of people wanted lower rates. At least they're not going to go higher. But the third point is really important here. What's that?
Steve, let me just jump in 1 second before you get to the third point, though. We heard Edward Lawrence talk about these swap lines where the Federal Reserve made a commitment to help other currencies, which our dollar is at a 2-year low. And what I'm concerned about, and the scuttlebutt we're hearing, is that the Federal Reserve will join with other central banks with a focus on climate change. We know that the next Fed chairman could be focused on. So if you're concerned now about the monetizing of $80 billion a month, what happens if it becomes $150 billion a month, and not just to help America, but ostensibly to help the world?
Well, this is a great point that you are making right now, Charles, because look at what's happening with the incoming Biden administration. The passcode that you have, the litmus test that you have to pass to be part of this Biden administration is you have to be all in on climate change. You have climate change fanatics now in every single agency of government. And your point is now the Fed may be, part of this. And look, we have a lot of problems in this country right now, everything from the schools to the high unemployment. And I guarantee you, one of our top 10 problems in the United States right now is not climate change. And it makes me nervous that the policymakers are focusing on an issue when they should be focusing on how do we get people back into jobs? How do we deal with our health and schools? And I have a big problem with that. And I hope that the Fed does not get involved in the climate change issue.
Yeah, I'm afraid they probably will. Kathryn, I want to bring you into this discussion. Your initial thoughts on what we've heard and also the impact on the stock market.
Well, let's just remember the Fed has an explicit dual mandate, and that's full employment and 2% inflation. So, of course, the Fed has already gone far beyond its skis and beyond its mandate. And once we get into, as they already have, promised to get into the global climate change debate and racial injustice, that certainly is not on the forefront of what the Fed should be doing. It should really stay within its mandate. I will say a couple things, Charles. My initial reaction is there was no duration extension here. There was no explicit economic metrics that were going to be more transparently announced today. which would attach themselves to asset purchases. In other words, if the economy keeps doing very well, are we going to, trail back a little bit or cut back on asset purchases? Nothing to that extent. But I would note that I think that duration extension is inevitable, and I do think the Fed is going to talk about capping rates on the Treasury curve, especially at the 10-year. We have a spate of new issuance coming, especially with additional fiscal stimuli. And the fact is that rising Treasury yields go completely against what the Fed has heretofore worked so aggressively to attain, which is very low rates and fostering this credit expansion.
I want to piggyback off that and go back to Danielle on this. To that point, capping the yield, negative interest rates. We see Spain now with the negative 10-year yield joining many other European countries. As Powell is walking this really awkward thin line here where he's not committing to anything really creative per se on the downside, and yet, he seems like he's been loath to raise rates. Although he said with a vaccine and more fiscal stimulus, maybe that would open the door to higher rates. Where does this tell us? Where's he going to go next?
Well, I think a lot of that is going to be contingent, Charles, upon what Janet Yellen can and cannot accomplish. You have to keep in mind that Janet Yellen was something of a mentor to Jay Powell. After he, knew that he was going to be coming on as chair, he has relied on her guidance. And Janet Yellen has said in the past, under the correct circumstances, under certain circumstances, that she would advocate for negative interest rate policy, that she would advocate for the Federal Reserve buying equities. I wouldn't be surprised if she would advocate for the Federal Reserve delivering money directly to Americans, directly into those bank accounts, which, by the way, would require an act of Congress. But guess what? She is going to be the chief negotiator there in Congress. She's able to cross the aisles. That's why markets have celebrated her coming on. But she scares the dickens out of me because I think that Jay Powell, who has been adamant, he's held the line against negative interest rate policy that has failed miserably in Europe and in Japan. I'm concerned that he could be swayed by Janet Yellen and her gravitas in his mind to take on policies that have been dreadfully damaging in other parts of the world.
So to that point, the market sharing, there's a piece just a couple hours ago in the Washington Post saying 45 of the 50 biggest companies in America made money this year. 27, though, did it while they were laying folks off. I'll go back to you first, Steve, more on this. There's an overarching battle, a war against capitalism. And these kind of articles, when people see that these companies are making money, they're laying folks off, and their stocks are going through the roof, feed into that narrative. What do you say against that?
First of all, I think what we've done in the last 10 months, Charles, in this country has been incredibly unfair to the small businesses of this country. I've talked to you about this before on this show, but somebody has got to explain to me why Joe's hardware store has to shut down, but Home Depot, and I don't have anything against Home Depot, or all these other big box stores and big companies get to stay open. It has been a very lopsided recovery where the big businesses are doing really well. And look, I'm not against big business, Charles, but I just think it's been incredibly unfair to the mom and pop shops that are really struggling. And one other, quick point about, what you were just talking about, Judy Shelton, they were saying Judy Shelton is not independent of the Fed, and that's why so many of these people are trying to shoot her down. Well, what about what's going on right now, Charles? With you've got Janet Yellen and the Fed chairman basically. That one makes me wonder about Fed independence.
Yeah, well, real quick, Kathryn, on the same thing, because you posted a very powerful tweet back in May. You warned about federal and government stimulus. You said it would spark a backlash. What kind of revolt should we expect to see?
It should be a populist one. The fact is that the Main Street lending facility has been a complete failure, while the bailout of Wall Street has been a phenomenal success. I would say, Charles, that the income divide that we have in our country is nothing but growing, and that's at the hands of the U.S. Federal Reserve. A majority of Americans don't have a lot of their wealth in equities, yet we see right now record equity markets and 28 times forward earnings in the S&P 500. So this income divide is only being exacerbated by national lockdowns, which really disenfranchise the poorer segments of the population, many students in the poorer segments are absolutely disappearing from the education system, exacerbated by the Federal Reserve policies, which are doing nothing but enriching the major corporations while the small mom and pop shops are going out of business.
Yeah, and people are seeing it. Kathryn, Steve, Danielle, I'll see you a little later. Fantastic insight. I really appreciate it, and I know the audience does as well. You know, could it be, folks, lawmakers, the White House, everyone involved finally maybe getting together a second round of stimulus?